Okay, we're going to go ahead and get started now. I want to welcome everybody to the first webinar session of our XBRL for IFRS filers. As a thought leader in this space, Topan Vintage wants to ensure that all of our clients have the necessary resources for a successful transition into the world of XBRL. One quick disclaimer before we get started here. We are not attorneys and this is not technically legal advice. But what we're discussing today is coming from years of experience in the space, and we're hoping that you can get a lot out of it. So just so you know, a couple points of clarification. There is a Q&A bar available. We'll be answering questions at the end of the session. And don't be overwhelmed by the amount of information we're putting out today. We will be sending out a recording, as well as other helpful follow-up information to help you get through the XBRL process. With that, today I have with me Gordon Ruckdeschel, who's our Vice President of Operations. Gordon has over 20 years of experience in the space, including EDGAR, XBRL, typesetting, and print, and manages across all of our practice areas, including capital markets, corporate services, and funds and institutional services. I also have Chase Bongiorno, our Director of XBRL out here in Denver. Chase is served within public accounting firms, as well as sits on XBRL, US's Data Quality Committee, and FASB's Taxonomy Advisory Group. So as a quick introduction into XBRL before I hand it over to Gordon, for the layman, XBRL stands for Extensible Business Reporting Language. And it's a freely available global standard for exchanging business information in an XML format. And one easy way to think about it is it's taking a two-dimensional document, like the EDGAR version of your financial disclosures, and turning it into a three-dimensional version in XML. And the real goal is to provide additional transparency and accountability, where investors and SEC alike can push and pull this XML data into different algorithms to have different metrics and benchmarking right at the click of a button. And with that, I'm going to go ahead and hand it over to Gordon to begin on the XBRL overview.
Great. Thank you very much, Ben. And good day, everyone. And thank you for joining the first in our series of 3 webinars on XBRL for IFRS. We have a lot to get through this morning, and we're excited to share it with you. So, the genesis for this webinar series came out of a meeting that the Securities and Exchange Commission had on March 1st. And that meeting was actually meant to finalize a rule on hyperlinking of exhibits and also to pass a proposed rule for inline XBRL, which we'll talk about a little bit later. And then as somewhat of a surprise, there was an announcement that the IFRS taxonomy was finally available. So those of us in the industry have been waiting and waiting and waiting for many years for this to happen, although companies who file an IFRS may have been wanting to be waiting a little bit longer. But that IFRS taxonomy was finally approved on March 1st, and so therefore filers who So the interesting thing is that this rule has been in place since 2009, and technically since 2011, companies that prepare financials in IFRS, foreign private issuers, should have had to file, but they couldn't because of that lack of taxonomy. So after we got that announcement on March 1st, the SEC did put out a notification to clarify that even though technically you can start filing XBRL now, you do not have to. You can wait until you have a report with a fiscal year end after December 15th. So essentially for most companies, that's going to mean the fiscal year period that ends December 31st or later will require XBRL. So essentially we're talking about 2018. And again, there's no change to that rule that came out from the Securities and Exchange Commission on interactive data in 2009. All the same rules apply, including the fact that there is a grace period that will be available for first-time filers. And what that grace period means is you can still file your traditional 20F or 40F filing in HTML format by the deadline, and then you would get 30 days after that to get your first XBRL transmission sent to the SEC's EDGAR system. However, one caveat there to note is that if you choose to take advantage of that grace period, you will have to file an amendment, either a 20FA or a 40FA as appropriate, to accommodate the XBRL. And additionally, you have to do that on the first time. So you can't file your XBRL concurrently 1 year and then decide you want to take advantage of the grace period the next year. It's sort of a use it or lose it provision. So as we think about what does this mean for foreign private issuers having to file an XBRL, essentially when we look at the marketplace overall, it should essentially double almost the number of 20F filings that will need XBRL. Previously, only companies that reported their financials in US GAAP had to file XBRL with the SEC. Now everyone that files IFRS will have to file as well. And since most companies are December 31 fiscal year end companies, those 20Fs will be due around the end of April each year. So that is a peak season for the industry in general. So something to keep in mind as you're planning and really get started early. Additionally, Canadian MJDS, the multi-jurisdictional disclosure system, filers that file on 40F will also have to file with XBRL as well. And in general, if you have a calendar year in there, you know your 40F is going to be due around the end of March. And that is also a peak period for the industry, since many domestic, and in this case, by domestic, we mean US, annual reports are due around the same time. Additionally, there are limited circumstances where 6K filings may require XBRL as well. It's a little bit technical and it is dependent on your specific company's situation. So we recommend that you check with your legal counsel to determine whether or not you will need to tag any of your 6K filings with XBRL as well. So Ben talked a little bit at the beginning about what XBRL meant, and I'm going to talk a little bit about what the SEC's rule and the SEC's flavor of XBRL requires. XBRL is used worldwide, and the SEC's implementation of it is somewhat complex. So with XBRL for the SEC, what we're really talking about is 4 different levels of tagging of your face financial statements and footnotes. And we'll have an example of this in a moment, and then my colleagues will also show an example as well. So at level 1, the base level, you'll be required to take your face financial statements, meaning your balance sheet, the income statement, cash flow, etc., and each line item of those financial statements will need to be tagged with what's called an XML code that comes out of the taxonomy that will give meaning to what that line item is. In essence, what financial concept are you representing when you're putting that line item into your financial statement? Additionally, at level 1, each of the footnotes that accompanies the face financial statements needs to be tagged as a whole. So for example, if you have a footnote about your significant accounting policies, you would highlight that entire footnote and tag it with the part of the taxonomy that says this is the significant accounting policies. Now, speaking of accounting policies, at level 2, each of those accounting policies that you discuss in your financial statements, whether they are in a note about accounting policies or elsewhere, needs to be tagged as a block so that its system can understand what that language is. So for example, if you have an accounting policy on revenue recognition, you would highlight that area and tag it with the appropriate tag that talks about revenue recognition accounting policies. Moving on to level 3, you're also required to block tag each table In other words, each set of tabular information that appears in the footnotes as well. And then finally, the sort of bear of XBRL is the level 4, which essentially is the detailed tagging of virtually every numeric element that exists in the footnotes. Once you have all 4 of those levels completed, they get assembled and put together in an instance file. And again, Chase will talk more about that process a little bit later. So our suggestion is that you start to familiarize yourself with the IFRS taxonomy now. And that taxonomy is like a dictionary of those financial concepts that are in your financial statements. The idea is that the taxonomy tries to capture most of the financial reporting scenarios under IFRS, but of course it's not going to be able to capture everything. Otherwise the taxonomy would grow wildly and it would be very difficult to find the appropriate financial concept tag to apply to your statements. So the Securities and Exchange Commission, unlike some other jurisdictions, requires that if the element does not exist in the taxonomy for the financial concept you are reporting, you must extend the taxonomy by defining a custom element. In essence, you're creating a new word or entry in the dictionary. And there's a process around that extension so that when you create it and add it to your custom taxonomy, an analyst, a machine, a program can understand what it is that you're talking about. So to wrap up here, successful XBRL really means combining 4 main elements. 1, a review and an understanding of a company's financial statements. And of course, if you're in a financial reporting team, that's going to be the spot where you're most comfortable. You also need to review and understand the interactive data rule from 2009. You need to understand and be able to extend the taxonomy for IFRS. And that needs to be married together with the following of the Edgar Filer Manual or EFM rules that pertain to XBRL. And in general, the core competency of the financial reporting team will be putting those financial statements together, and the service provider that you work with will be working on the other components so that everything together combines and creates a successful XBRL package for the year. So as we move on, we have an example of sort of a traditional note that you would be used to seeing in the days before XBRL. So this is a dummy note, note 5 of a set of financials that talks about debt. And you'll see that there's a few paragraphs with some numbers mentioned. Then there's a table on short-term maturities of debt. And you'll see that I put this example together and I'm clearly not an accountant. Then in the old days, the point here was the financial reporting team would get this together. It would be converted to the Edgar format as needed, generally HTML. And the role of the service provider was just to make sure that everything that was in the financial statements got correctly converted to HTML. And if you were responsible for the review, you would be reviewing as well to make sure that nothing got dropped, that everything is formatted the way that you want it to be formatted. And in essence, that was the entire job. Now, with XBRL, that changes quite a bit. So on this page, we see the same note, but we see a large red box around the entire note. And that red box, in essence, represents the level 1 tagging. So that is the block tagging of that entire note, which would be tagged with an appropriate element out of the taxonomy that related to debt. The smaller blue box shows the lead-in sentence and the table related to the short-term debt and the maturities. And that would be a level 3 tag where the tables have to be tagged. And then the green circles or ovals represent each numeric element within that footnote that also have to be tagged. So each of those numbers has to be tagged with an XML tag out of the IFRS taxonomy that would tell a system what that number actually represents, as opposed to just being a table cell or a number in a paragraph. And also, one thing we don't see on this table, we see maturities of 30 days or less, 31 to 60, 61 to 90, and 91 plus. There could be a fifth column, which would be the total. Now, in theory, that total number should be the sum of the four prior numbers. That number, if present in the financial statements, would also have to be tagged. Additionally, because it is a total, a calculation would be created within XBRL that would tell a system, hey, that first element, 30 days or less, plus the next one, plus the next one, plus the next one, add up to the total. And of course, that allows for some nice error checking as well, because we can run validations against calculations to make sure that the sums add to the total of the components. All right. And as we move on here, I'm shortly going to turn this over to my colleagues for a live example of XBRL. And just to talk briefly about some of the terminology, which you do have to get used to as you start thinking about XBRL. So you'll hear words like element names and identifiers. That's what I was talking about, those unique tags that identify the data and tell a system what it is. So instead of the number 50 being in a cash column and it's just a number in a table, once you apply the tag, a system can say, oh, that's cash or cash and cash equivalents. The labels that belong to those elements are the human readable names that reflect the accounting meaning of the element. And in general, the rule is that the label should match what is in the financial statements in the HTML version of the document. And then you have element types, which indicate what kind of units are we talking about here? Is it a text string? Is it per share? Is it monetary? Is it pure? And additionally, you have axes and members, which allow you to essentially turn that 2 dimension into 3 dimensions. So where you can talk about different classes of property, plant, and equipment, you can talk about different business segments, and it essentially allows you to have the same element applied to different values within your financial statements. And those axes and members get grouped together with those line item elements to create a table. And that's where we really get into that 3-dimensional place. And in essence, that whole taxonomy provides content to help the user understand the accounting meaning of the elements, how they may mathematically relate to each other. In the example that I used on the prior slide, where we talk about the calculations and how the total of the short-term debt should be the sum of the amounts that are maturing in different periods. And then, of course, the taxonomy structure also provides a presentation view so that there is an ordering to all of this, and it can be human readable and rendered, even though it's very important to keep in mind that the primary purpose of XBRL is not for human readability, because we already have that in the standard HTML version. The primary purpose of XBRL is to give meaning to the HTML, to those financial concepts that are within the financial statements, so that a system can ingest that information and allow immediate and automatic analysis to be done. And with that, I will turn it over to Ben and Chase.
Thanks, Gordon. And thanks to everyone who's taken the time out of their day to join. We just went over the 30,000-foot view of XBRL, so let's go into the weeds a bit. While IFRS is a principles-based reporting system and US GAAP is more of a rules-based system, these differences contribute to distinctive and different taxonomies. For example, the larger, more industry-specific disclosures that come with the US GAAP are not present in the slimmed-down version of the IFRS taxonomy we see today. However, just like the US GAAP, the IFRS taxonomy uses elements to capture unique facts. These elements are described using 3 properties. The first is line items, which represent the accounting concept being reported. The next is a classification of the element as either numerical or narrative, reflecting, again, whether the reported value is a narrative, for example, an accounting policy, or a numeric, such as a per share item type or a dollar amount. The final is a concept you might be familiar with from Gordon's presentation a moment ago, which is the axis and members. These power the taxonomy and add definition, and they can add detail and avoid extensions. Now, each element will have a few unique attributes. Obviously, element names and identifiers allow them to uniquely identify and mark up data, and the human readable labels are important, but they're not as important as some of the other attributes associated with these elements. And we'll go into an example in just a moment. Element types allow certain values to be reported under certain elements. For example, a monetary element will only allow monetary data types to be reported, while a per share value amount will only allow per share values to be reported to the end user. This adds important detail to your disclosures and allows end users of the data to get the information they need. There are also other types of attributes that should be considered as you're reviewing the IFRS taxonomy. The first is a period type, which is a period or duration or instant period. Now, a duration is period of time, while an instant is a snapshot of a specific point in time. And a balance is going to be the basic debit and credit that we're all familiar with from accounting. Let's jump into the actual taxonomy. So this taxonomy is the business combination section of the newly released IFRS taxonomy. And you can see it's structured in a pretty logical way once you see what you're working with. The first level is the level 1 text block tag. That was a snapshot of the full note Gordon showed a moment ago. In this case, it's called Disclosure of Business Combinations text block. Under it live a series of elements that can be used to describe those business combinations, and then a level 3 text block that can be used for tagging tables. In this case, it's called Disclosure of Detailed Information About Business Combinations text block. Under that level 3 tag, you start to get into the taxonomy structure. And again, this is what adds value and definition for end users. This includes abstracts. In this case, the abstract is labeled as Disclosure of Detailed Information About Business Combinations. Below that is the hypercube structure. And we won't go into too much depth on hypercubes as it can be a bit complex. But in this case, you can see the table is Disclosures of Detailed Information About Business Combinations table. Below that are the axis and members that we spoke of earlier. Again, these can help avoid extensions and give important context to the values you're reporting. They take a data set from being flat and paper formatted to a 3-dimensional model of your financial disclosure. Now we have that line item that we discussed earlier, Disclosures of Detailed Information About Business Combinations. This is discussing the accounting concept that's being presented. And everything below that is the meat of the taxonomy. These are the level 4 detailed tags that a majority of you will spend your time reviewing. Now, it's important to understand that this is the default structure and is not a custom structure specific to a company. We'll look at that next. This default structure provides a mechanism for preparers and accountants to review level 4 and up values in a readable format. So you can select elements to use by reviewing the standard taxonomy. Some you can select based on a simple reading of the element. For example, name of acquiree is a straightforward concept that you can understand is going to be a narrative value for a company you acquired. And others will be significantly more complex and will require reviewing some of those other attributes that we spoke of, including balance type, period type, etc. A good example of that is the contingent consideration arrangement you see below the acquisition date fair value abstract. Once you get into this level of complexity on an element, it's often best to spend some time reviewing the rest of the attributes. We're going to jump to that now. All right, so if you're reviewing your XBRL, you are on track. Keep in mind that this review should be done, especially your first time, significantly before your day of filing. Set aside a few hours to work with your provider to get training to really understand where best to focus your energy. And then what I recommend doing is taking a few attempts at it and then reaching out to your preparer with general questions. If you start to feel like you're making the same sort of comment over and over again, it might be best to pause and reach out to your preparer to make sure you're not wasting any time. All right, so when we jump to the XBRL element review, there are a few things we need to focus on. Obviously, that label is the most obvious, and it's the easiest one to review, but it's also the least important. A much more important review consists of understanding the definition, the reference the element is based on, the period type. Again, this is instant and duration, which will impact where it renders, as well as the data type and scale and precision. Ben, if you don't mind, let's jump to that live example. Okay, great. So we're looking at a statement of earnings here, and if you can turn your attention to the right side of the screen, there's a review details pane, which has information on the element labeled revenues. During your review, the first stop should be right below the label, the definition. You can see a unique definition is provided for this specific element, and an end user, in theory, will pull up the specific value he's looking at and read the definition of the element to understand exactly what's being reported. Now, an important point on the definition, if it does feel a bit broad and it's not as specific as the value you're disclosing, that's okay. It may not be necessary to extend. But if the element is far too specific for what's being disclosed, it is important that you consider using other elements, either standards or extension. As you continue your review, you should look at the balance type, which you can see here is a credit. Now, you'll also look at the period type, and these should match the GL. Whatever you're reporting internally, whatever you're trying to report to your stakeholders should be represented here in this review details pane. This is the meat of the XBRL. It seems like it's in the weeds, and it is, but this is what investors are looking for. Now, if this tag is what you want, you can go ahead and click approve, and these approvals will typically carry forward from filing to filing. Great.
And one quick thing to point out, this is one of the various systems that we offer from an XBRL review standpoint. This is a SaaS-based system that allows you to review the XBRL right within the context of your Word document. And we also have a more traditional-based system that allows you to review the XBRL in an online viewer's guide. They both fall into what we call our FlexBRL program, and you can easily transition from one to the other. We'll take a deeper dive into these options in future webinars.
Hey, Ben and Chase, it's Gordon, and I just wanted to jump in and say as well, since Chase was talking about reviewing the XBRL and making sure that you're prepared, you know, I think back to when we started this whole process back in 2009, and then in 2011, when the bulk of companies were required to start filing an XBRL, it really has been a tremendous change between then and now. So, you know, companies that are familiar with filing an XBRL over the years, the process has gotten easier, the comments are fewer, but I'm kind of reminded of that now because we're talking about a taxonomy that's going to be used for the first time, and quite potentially companies that haven't thought about XBRL in the past because they haven't had to. And so I just wanted to take a quick minute and just give some of my thoughts from that time period. And that was, I do recall when we were first working with companies, if it was the first time that they were going through XBRL, that we would get, you know, 100 comments, potentially more than 100 comments on the first round of review. And that was not anything out of the ordinary. That was a very typical number to get. And there was a lot of conversation back and forth between companies and auditors, with the preparers, to make sure that everyone was in agreement that the elements that were chosen were the appropriate elements that really represented what the company was saying in their financial statements. So I guess what I'm saying is I totally agree with your point about starting early. And in fact, you know, where we're really at when we look at XBRL for IFRS is we're really looking at wanting to onboard people the prior year. Does that make sense, Chase, in terms of making sure that people are prepared for this upcoming mandate?
It does, Gordon, and I think that's an important point. The earlier you can begin to familiarize yourself with not only the standard IFRS taxonomy, but your custom entity-specific taxonomy, the easier the XBRL process is going to be. Obviously, there can be some growing pains the first filing, but what we found is the earlier you start, the less likely you are to encounter any hiccups. Additionally, we provide extra support for first-time filers to ensure that they have the service level they need to be successful. All right, great. Well, let's jump to extensions then, guys. This is an important point and something that's easily overlooked. Generally speaking, extensions should be used sparingly, but they are an important part of the XBRL world. So if a standard taxonomy as modeled by the IASB or FASB does not include an element that you need for your specific disclosure, you can actually create that. All right, this is called an extension. In the IFRS taxonomy, there are a few specific cases where that might happen. The first is obviously that entity-specific disclosure that will just not be modeled by a standard governing body because it's so entity-specific. But a more common relates to common disclosures within a specific country or region. And this is going to be particularly true for IFRS, given the global scale of the mandate. Keep in mind, if you're in a region that has region-specific disclosures, such as China and Asia Pacific, it's important that you take time to review the taxonomy and consider making very careful extensions to communicate with your stakeholders the exact information you want to communicate. Now, another example that might call for an extension are regulatory specific requirements that may come from working with your local regulator or from a long-term agreement that you're part of. So these would also require specific extensions. If you communicate this to your preparer, it's a pretty straightforward process, although I do need to make a few points on information to consider when you're extending an element. The first is what we spoke about earlier. That's the definition. That definition is a really effective way to communicate with stakeholders, and I can tell you from my own perspective, it's something that we use when we're reviewing other companies' XBRL files. So consider writing a custom definition to explain why you're extending this element, what it's reporting, as well as any reference to specific items you need to include. The next is the period balance type, as these are very important for making sure that the instance balance type that's being communicated to end users is accurate. So take a moment and make sure what is in your GL or accounting system is accurately reflected in your extension. You know, the next point I'll make around extensions are there's easy ways to avoid them. Again, if you have an element that's a bit too broad, you don't actually need to extend. We can leverage those access domain combinations and the members associated with them to add the context and definition required to accurately report information. So when you're considering making an extension, go back to that standard taxonomy and see if there are members that are trying to communicate the same concept you are. If so, they can be added to the element, again, making the data more three-dimensional and avoiding extensions. Generally speaking, extensions do not decrease the value of the data being reported. However, they make it much more complex to compare the data you're reporting with your peers and counterparts. Therefore, keeping extensions to a minimum on your filing, especially as you roll out the new mandate, is very important. Questions around extensions can absolutely be communicated to your provider, who should be able to help with a detailed explanation of why you need one in a specific case or why you don't.
All right, great. Thanks, Chase. With that, we'll hand it to Gordon to kind of wrap up looking at another proposed SEC piece of regulation for inline XBRL.
Ben, thanks a lot. And and before I get to that, Chase made me think when he was talking about extensions that, again, with that experience that we've seen over the last several years, I'm sure as everyone on the call knows, there have been hiccups with XBRL. There has been dissatisfaction with XBRL and how it's being used and how it's being handled with the SEC mandate. And a lot of that dissatisfaction has come from two main areas. And one of those areas is essentially errors within the XBRL or misunderstandings, and the primary one being negated labels. So what we're talking about is essentially, a number that really represents a positive fact that's ending up as a negative in the XBRL or vice versa. And some of that comes from, a straightforward look at the financial statements where companies will, subtract off cost of goods sold, and it's in parentheses because they're indicating that it's coming off of their revenue line. And yet, of course, it's not a negative cost, right? The number has to go into the XBRL as positive. So we've been able to combat a lot of that with some rules and validations that have been added in. In fact, Chase sits on a committee that develops those rules and works with XBRL US and various organizations to get those rules vetted. There's a public comment period, and frankly, it has reduced the number of those errors significantly by more than half just from putting those validation rules in. So that's been very helpful. And the other main point has been extension. So Chase was talking about the issue of comparability. And of course, as soon as you extend something, it is no longer comparable because it's not the standard element. And of course, there are times when you have to extend, and it is appropriate to extend, but that has been another main pain point with the rollout of XBRL in the United States, is that companies are overextending and therefore decreasing the utility and usability of the XBRL. So what we're hoping is that with all of this, these lessons learned from the US GAAP side of the XBRL rollout in the last several years, that with IFRS rollout, you guys will actually be starting at a much better point for XBRL. And so that brings me on to inline. And so ironically, you're just being mandated to start preparing XBRL in the traditional way now. And there is now a proposal in front of the public that was passed by the SEC, and it's finishing its comment period actually within the next week. I believe comments are due. And then the SEC will review those comments and decide whether to make this rule final. And if they do make this rule final, what it will mean is that there will no longer be two sets of files, meaning one, the traditional 20F or 40F or 6K that is in HTML format, and then another representation, another set of files that are XML based, that are those XBRL files that contain all the code that gives meaning. Instead, it will be what is called inline. In essence, it will be the content merged with the metadata around the content that tells a system what those numbers or text represent. And in essence, in a lot of ways, if you're on a disclosure management system today, that's how it's already done, in essence. And the tags are then stripped to a separate file for the traditional filing. Going forward, if this inline rule passes, there will be one joint file that files together. And we do believe that it will help, certainly with what's called a completeness review. It's a little bit tricky right now when you're doing your review of XBRL. Of course, you're checking to make sure that the element selection is correct. You're checking to make sure that it's instant versus duration, that the right balance is there, that the scale and precision are correct. But then also, you need to check for completeness, meaning that all those levels 1 through 4 are done. And when you're looking at your HTML file on one side, and you're looking at a complex set of rendered data on the other side, it can be difficult to tell if your preparer has properly tagged everything, and that some things haven't been missed. When inline goes through, assuming that it does, it will be very visually easy to scan the document and see that either every element has been tagged or it has not been tagged. It may reduce tagging errors as well, since the content and the tag will be together, but I do want to say that that is no guarantee. There is still metadata work that goes on behind the scenes that browsers won't see, that you won't see in a visual representation, but that when you click on it, on that element, it will show you what the information is, and that's still work that does need to be done. And then finally, that rule does remove the requirement to post XBRL files on corporate websites. I think the SEC has realized that the uptake of usage of people going to corporate websites to pull XBRL files is extremely low, and I think they're willing to relax that and remove that requirement if this rule goes through. All right, back to you guys.
Great, thanks, Gordon. So we want to wrap up here, guys. Again, thanking you for your time today. I know we didn't go the full hour, but sometimes your first go around with XBRL can seem a little bit like drinking from the fire hose. So we wanted to make sure you're well aware of our next 2 upcoming webinars, which will fall on the following 2 Thursdays. Next week, we'll feature Rob Blake, who's the VP of Product Management at Certain, one of the highly touted SaaS platforms out there where you can create XBRL. We'll do a good recap of the educational webinar today, review some of the platform options that are out there, create a milestone calendar, so one that basically can align with your internal reporting calendar, while also checking off some of the necessary boxes for XBRL mandate. We'll review some of the common obstacles that come with the XBRL review, creation, and filing process, and then wrap up looking at some implementation steps. The following week, we'll have our webinar with Campbell Pride, who's CEO at XBRL US, one of the original thought leaders and creators behind the XBRL movement. Again, we'll be recapping the education and how to create a success plan. Talking about how we can implement the best software and service that will work the best for your unique team and your unique reporting challenges, some of the onboarding and individual training, as well as some closing statements around IFRS. So keep a lookout for those. We'd love to have you attend. As I mentioned previously, we'll be continuing to put out thought leadership information around IFRS XBRL, as well as a recording of this particular webinar and the PowerPoint presentation that we went through today. And with that, we'll go ahead and open it up for some Q&A. And have one question come in.
Yeah,
sorry,
I want to note as well that I believe everyone on the call is muted. So if you have a question, there should be a Q&A area on your webinar, and please feel free to put that question in and we will address it. If we can't address it on this webinar, we will get an answer back to you. Thanks.
So one quick question coming through, will we need to file past documents in XBRL? Chase, do you want to take that one?
Sure. No, only documents with reporting periods after December 15th, 2017 will be required to file in XBRL for companies utilizing IFRS.
Okay, and one other question that I have in front of me is, does HTML need to be filed at the same time as the XBRL? Gordon, do you want to jump in on that one?
Yeah, sure. It's actually a good one that actually has a few different answers, Ben. So in essence, there's no such thing as an XBRL filing by itself. An XBRL filing must always be accompanied by something else. So in general, the way that things exist now, the HTML files as the main document, and then there are exhibits that go along with it, and some of those exhibits are the XBRL files. So they are generally filed together as one package. However, as mentioned in a prior slide, there is that grace period for first-time IFRS filers. And so if you take advantage of that, either because you don't have time, you're getting the XBRL together, but you don't have that time for review. You feel it's more important to get the financial data out there to the marketplace and then worry about the XBRL the first time around. You are free to do that. But again, remember, you can't just file the XBRL. You will have to file an amended 20F or an amended 40F in order to get the XBRL on file. So you need to balance how that may be perceived in the marketplace as filing an amendment versus making sure that you have that time to get it filed at the same time. Finally, if that inline rule goes ahead, then there's no such thing as separate, right? Because the XBRL will be embedded within the financial statements. And at that time, of course, they must file together. And interestingly, what will happen is if inline goes through, they will file together, and then the SEC will strip out the tags that are the XBRL representation into a separate file, right? Because of course, the primary purpose is for programs to use that XBRL, and so therefore they need what's called an instance file, which is the collection of all of the facts that have been tagged in one file. So the SEC will do that part for you, but it must still file together.
Great, thanks, Gordon. And one final question here. Can we expect the taxonomy to change over time if accounting policies change?
Good question. The short answer is yes. Each year, the IFRS taxonomy will be updated based on the suggestions from the industry. Just as I said on the FASB Taxonomy Advisory Group, the IASB has a taxonomy advisory group, which helps improve the taxonomy on an ongoing basis. In fact, a 2017 version is being commented on right now, and we'll work continuously to improve the IFRS reporting structure.
Great, thanks, Chase. No other questions I have coming in at this time. If you have anything, please submit or reach out to your Topan Vintage representative. We're happy to get everything answered that we can, or set up a private consultation to talk through your unique reporting needs. So at this time, I believe we are going to go ahead and shut down the webinar. Thanks again, everybody, for your time, and we look forward to you joining our upcoming series.